How great it is. How great it is. All the time. Everything has to get over good. Now, too much that has been given to us for us to not get things done well, and especially in this country. And I mean, sometimes we take it for granted. But God has given us a lot in this country, and we have a right to use what He's given us to help others and help them get to their state, their place that God wants them to, their value, the understanding the value, so they could add value like God created us to. Okay, so we have help us get it done, partner with us as we do great things for the kingdom of God. Okay, hope you checked our blog out this week, every Friday at 8 a.m. This week was, let me make sure I get the title right. Always have to look at these things, guys. Bootstrap versus VC backed, venture capital backed. And that's what we're looking at, investments. And that's how, if you're in the entrepreneur space like we are, you would know all about that. Bootstrap is when you do it on your own. You get your money, you put your monies together, whatever you save, whatever you get friends and family to give to you, whatever it is, and you foot the bill on your own to get that business going, that organization, whatever it is. Now, venture capital back is when you have other people invest into your corporation, and you have to go to the venture capitalists. And there's a lot of them. If you ever look at the show Shark Tank, that's what that's about. They're people who've established themselves. They made a whole bunch of money, and now they like to put it into other businesses to either acquire the businesses or invest in it so they can become partners in the business, or sometimes they just want to give you the money and with no partnership, just because they like what you're doing. That's what we call the venture capitalists. And so when we have these two things, we were talking about it. I like the podcast that came out of it. It was really, really good. And it was talking about the different advantages and the disadvantages. And a lot of times we especially if you're in that entrepreneurial space, it's difficult. It is tight. Okay. And so there's a lot of pros and cons to doing it all yourself, or having other people invest in your company. And so that's what we're talking about. So I hope it was very, very interesting. Some of the points that were touched on is what I really, really wanted to, if you don't, go out there and check it, Fava Conversation on our favourofagreatgod.com website, and check it out and see it and listen to it. Very informative and very good. Okay. Some of the pros and cons, and they broke them down a little bit more than I'm going to, but first one, control versus accountability. If you're bootstrapped, you get to keep all the control. I mean, you do everything yourself. You create the vision. You create the product, the hiring priorities, the pricing, the exit. Everything is you. It's all on you. And that way, when you have that, you keep control. And especially for like entrepreneurs like me, who are probably in you're believers, you're faith-based, and you have different values that you stand by. That's one of the best ways to keep it together, because when you bring more people in, you got to manage more people. But if you want to grow, you're going to need more people. You can't do it yourself. So that's one area. That's why a lot of people stay in that, where I'm going to put all the monies in, so I don't want to have investors. And then you have to make sure if you get investors, you have good investors, because you could end up in a situation, if you ever watch movies about the mafia and everything, where they give you money and then they want to come control you. So that's the other situation. Venture capitalists back, you see meaningful control in exchange for governance and accountability. You have board oversight, you have milestone expectations, and investor opinions accelerate strategic clarity. So people are now coming in, they put their monies in, they're going to want to put their 2 cents in. Very few people want to be silent partners, where they give you the money and they don't want to do anything, just do what you do because they like what you do. Very few people are like that, okay? But for the majority of them, and by right, I mean, if you're putting your money somewhere, you want to make sure it's doing good and it's doing what you want it to do. So that's the two differences. And some people pick one over the other for whatever your choice is, whatever works for you, actually. Okay. Another one they mentioned was speed of opportunity versus focused survival. The bootstrap person, resource constraints force ruthless focus. You prioritize revenue generating features and customer retention. So you focus on certain things. I want to keep my customers. I want to make money, and you stay there. So you have that. That's that focus survival. We got to make it. We got to get there. Whereas with the venture capitalist, capital buys speed, hiring, marketing, and product investment at scale. That speed wins markets when timing and network effects matter. So it's and don't get me wrong, neither of them are wrong, but you have to understand what you're getting into. So when you do venture capital and you get money from people, you have more money and you can go faster. You can do more, you can hire more, you can pay better salaries. That means you can get better better personnel to work for you. You get more expertise to work for you because you have that money, and you can market things because you have the money to do it. And that's why a lot of people have to go with venture capitalists, and I can see it. But you also have to think when you're doing that, make sure you are very discerning. You vet the people well and all that, because once they give you their money, they are now influential in your business. You're accountable to them. You have to answer to them. And if they don't have good values, that's going to be a clash. So you have to vet those very, very carefully. Culture formation. Deep ownership versus growth urgency. The bootstrap person, a bootstrap company, teams often have high ownership and multidisciplinary roles. Employees feel the tangible impact of their work. Culture tends to be long horizon, frugal, and mission driven. So employees, they get to see their what do you call that? The fruit of their labors, if you say so. There's a culture that's created because you have everybody working together with the same mission, and they understand each other for the most part. Venture capitalist backed companies, however, rapid hiring and structured incentives, options, KPIs, you give them benefits in the company, produce growth focused cultures. So because you're hiring quickly and the money's coming, you now have a culture where we need to grow fast. We want to scale fast because we have the people, we have the money to do so. So why not do so? That attracts people excited by scale and rapid career leaps. However, frequent rewiring from investor demands can generate transactional relationships and short termism. So because you're hiring and people know what's going on, they basically just say, you have to pay me this amount of money for my labor. I need this, I need that. So it's more transactional as opposed to them feeling invested enough to want to put their all into it, to want to bring their ideas, to want to bring just different things to add to it, because they don't feel as invested, because they don't see it as something being a personal thing where they get to add to the mission. They see there's something where I'm making money and I could be growing fast, and it's a big company. And so they're focused probably more on the money than actually adding as much value as they can, or you know what I mean? Yeah. So it's understandable. Both are good in a way, but you just have to know what you're getting into, and you have to balance it well, because even if you're scaling, doesn't mean we don't want meaningful relationships, meaningful employees. You want them to feel like what they do matters, and it's important to the mission. So that's what I'm saying. If you have either or, you have to understand what it is and see how you can tweak what you need to tweak to get the results you want to get. I mean, understandable, right? Hiring signal, money versus mission. Bootstrap, you attract people who want autonomy, craft, and meaning. Salaries and perks may be constrained, so you rely on mission and equity upside in a smaller company. So a smaller company, you're not going to get too much money, so you're focused on what we could do to add meaning to people's lives. It may not be, so you have to focus. You're not focused on the salary because it's not going to be as big, but there's some perks to it. You get to bless people. That's why people who work in churches, because I worked in a nonprofit before, it's more focused on the value add to people's lives. You're doing God's mission as opposed to, because you're not making as much as you would make in the secular world. So you focus more on the value as opposed to the amount of money that you make. So that's the one thing with Bootstrap. In the venture capital now, you can compete for senior talent with market salaries and attractive equity packages tied to significant upside. But hiring for blitz scale sometimes brings in leaders optimized for growth over sustainability, increasing execution risk if growth stalls. So because they have that mindset of we want to add growth, we're going to make money, because the more growth we add, there are more promotions, there's an increase in salary we're going to get. So when you focus on that, you do things for that. But if something happens, like in the economy we have, where things are stalling and AI is coming in, whatever, and you can't make as much, that may bring a little frustration, and people could actually leave the company because they're not in it for that reason. You know what I'm saying? So there's a way you could do that. You could come together and make it, even if you're scaling and you're providing all the different promotions or whatever, you can now come and say, well, although we're doing this, we still want to stay on the mission. We still want to make sure that we're focused on helping people and adding value, even if the money is there as well. So you have to find a way to make that balance, because you can end up with a problem. If something goes wrong, they're not in it for the reasons that you want them to, you know? Whew, okay. And I've been in both companies, so I understand both styles of company culture, I guess, what you call it. Metrics and milestones, cash flow versus growth KPIs. Okay. Bootstrap, cash flow. They focus on cash flow and profitability. That dominates the whole situation. Metrics focus on unit economics, churn, and customer LTV. That makes businesses inherently resilient, but sometimes less exciting to outside observers. So they focus on profitability, okay? And the venture capitalists now, the metrics emphasize growth rate. It's all about getting growth, scaling as fast as possible. This aligns teams toward top line expansion and often obscures unit economics until late stage scrutiny. Okay, so you have to just understand what it is. You're growing so much, you focus on your numbers and everything that sometimes you're not scrutinizing what is going on within the company. Yeah, you may be making the numbers, but are we growing the way we should in the direction we should? Very important. Another one, optionality and exit. These are good. I just love these. Optionality and exit pathways. Bootstrap. You preserve every exit option. Acquisition, lifestyle, business, or later fundraising. You preserve them. You retain the right to walk away with a functioning, profitable company. Everything is yours, so you make decisions. With venture capital backed, the investor model often narrows acceptable exits to high multiple acquisitions or IPOs. Investors may push for aggressive outcomes to realize returns. If you miss those outcomes, dilution and misaligned timelines can leave founders with less than expected. So when you're focusing on scaling, you need to, I always say, even if you're trying to make the money, make sure you keep the mission in mind. Make sure you make sure that culture of adding value, of character, of integrity is also maintained. Because if you go focus after the numbers, there could be something could happen where now you're not as mission focused, you're not people focused, you forget about the people, you're just worried about the money. That's why you have companies that end up in situations where they do shady things, even if to preserve the profitability margins, to preserve their increase. And then you end up with people who create products that they know are not good, but they still put it out anyway. That's where that could come in, right there in that culture. Because you're so focused on scaling and you're making the money. If somebody now comes and tells you, oh, this is not ready yet to be sold or to put on the market, and then you can end up in a place where you're saying, well, we need to put it out because millions of dollars are riding on this, or the IPO, it's about to become an IPO, it's about to be become a public situation, and you want to promote it as one. So you end up doing shady things. You end up putting out bad bad reports with wrong numbers, so you could get the money part. So that's the code. That's why you have to make sure you balance those things. Okay, integrity has to match skill, so that you're not doing things just to get the money and you forget what the mission is. You forget that you're about helping people. You forget that it's about saving lives and all these different things. So very, very important to balance those two out, especially with venture capitalists, because remember, you're getting people's money. And so I always say, before you get their money, and we have something that we've created in our company about that. If you get their money, make sure their values match yours. Don't just go for the money and get giddy, because once you have the money, I always remember these Godfather movies, because that's all I have. Because with these mafia people, they give them the money. And even back in the day in the Wild Wild West, when things were now starting for countries like America, whatever, they would give them the money because they need the money, not asking questions. Okay, now about 5 years down, not even 5 years, something, a year down the road, they come to you with some weird request that is way shady, that's not in line with your values, and they tell you you can't tell them no because they own your company. You see what I'm saying? So it's very important when you're doing venture capital that you make sure you have a conversation with the people giving you money, tell them this is what we stand, and are you in agreement with us? If they're not with you and it's something with value and faith and helping people, you need to say no. You got to say no, because later on you could end up losing your company and sometimes losing. People go to jail for that. People lose their lives for that. So just always be mindful of these things. Okay, we have a couple more things. Risk distribution, personal versus collective. Bootstrap, founders shoulder more personal financial risk because all your money's in it. And that's why whenever you do companies, especially as founders, never put it in your name. Always put it in an LLC that's not linked to your name. Okay, so that protects you with legal situations and people doing different things. Now this goes to the company, not your personal stuff. So you don't lose your home over your company. You see what I'm saying? So always make sure you separate those two very nicely and legally. Legally. Okay. Keyword right there. Because that could come back to bite you when you're putting all your monies into something, into your company. And people, there's wicked people out there. There's all kinds of crazy out there. So be very careful. Now, venture capital backed, financial risk shifts to investors, enabling bolder bets. That external risk tolerance can lead to moonshot thinking, high reward, but also high burn that can destroy optionality if returns don't materialize. So always when they put money in your company and you've signed legal documents saying they're partners, so you try them, don't make them full partners of your company, limit the partnership. I usually say 25% or less, maybe 30 or less. Don't give them a whole 60%, you got 40. Anything over 50%, they own you. So that's why you have to make sure the people that, if you want to give it away and sell the rate, that's fine, because some people create companies to sell them. That's fine. But if you don't want to do that, watch the partnership, because when they put monies in, that means they have ownership of your company. And if you have a situation with them, you can't have a situation after you sign the dotted line. So you got to work that thing out really nicely, because then if they have an issue and then the risk falls on them, they come in to get the company, come to get their monies. They want to get their return. So you have to be very studious, and you have to be a good steward of that money. Make sure everything works out so they get the monies back. Don't be a company. I've heard some companies where people put the money in and they can't get their monies back. You will go to jail. You will. We're hearing, you hear it in the news all the time. Be very careful. Don't get giddy with the money. I tell people all money is not good money. Watch what you're getting. Watch who's giving it to you, and find out, do background checks. That's another thing I've been looking at lately. People don't do background checks never. I don't care if they're a Christian. I don't care if they're not. Background checks, because there are things people find out and you would not know up front. And then later on, when they come back with weird stuff, you're like, well, what is this? But once it's checked, you've already signed the contract with them. So you can't go back now to change it. So be very aware in business. That's why for me, I'm a founder, and I'm still bootstrapping, I guess. I guess I'm a bootstrapper. But I'm very careful with, you need investors, but I'm very prayerful about it. Everything I do, I'm praying, because I'm like, God, after all this work, then it's a lot of work, mind, body, and soul. You don't want to have your company come up and then somebody come and take your company into a hot mess with it. And then your name's on the line, your company's on the line, you feel a mess, you lose money, you can't there's a whole bunch of stuff that could happen. So get legal advice where necessary, financial advice where necessary, and make sure you get that thing nicely done. Okay. We're almost done, I think. You have fundraising time and mental load. Bootstrapped, you avoid fundraising cycles, which frees time for product and consumers. Venture capital, but you also face constant pressure to generate revenue. So it's only you. You don't have to go get fundraising stuff and do all these investment meetings or whatever. It's only you, but you got to make the money. Okay. Now that's where the situation is. A situation. Take it from someone who knows. Okay. Venture-backed fundraising consumes time, energy, and political capital, but when successful, it buys runway and resources. The hidden cost, managing investor relationships, becomes an ongoing executive responsibility. You have to have meetings. You have to give them reports. You got to show them what is making money, what is not making money. All these different things you got to put to them, and rightly so. So again, weigh your option and see what's necessary. At a certain point of the company, if it's not making enough, you may need to go to investors. But I've heard some companies, and I'm praying that I could be one of those, where they never needed investors. They just made money, and they made so much of it, and they were the prime. They bootstrapped it, and it worked. So it's not like it can't work. You just have to do a lot of work and know what to expect. I always tell everybody, don't expect something for something if that's not what it's meant to produce. Okay, so if you know what a bootstrapping is and know what a venture capital backed company is, don't expect something from either or that is not supposed to give. Okay, so you don't go into that, oh my God, I wish I could get this and that, but you want to be a bootstrapper. No. Or you're a venture capital, all these people give you money, and you're like, well, I it's my company. I did this. You can't tell me. Know what it is so you don't get messed up. Okay, and last one, brand and market perception. Bootstrap. Markets may respect sustainable businesses, but sometimes write them off as not bold enough. This affects partnerships, media attention, and recruiting in certain ecosystems. Okay. Markets may respect sustainable businesses, but sometimes write them off. So understand that. With venture capital backed companies, high profile funding rounds confer credibility and open doors because you know more people. It's like almost like a networking thing now. That halo helps with recruiting and press. So if you're linked to another company and that company has all these different people they know, usually they're bigger companies than yours, they're more well connected, they're richer than yours because they have the money to put in. So if they connect with you, you connect with everyone they're connected to. They can put you onto other people, and that helps to grow you even faster. Whereas if it's just you, it's you and what you know and what you know and what you know. And so that could be a little bit more difficult to manage or to maneuver you into the scalability that you want. So you have to understand that. So when you, that's why it's also, it can go the other way as well. When you're linked to venture capital people, make sure they have a good reputation. Everybody they're linked to, you get linked to them. That's what partnership is. So if they're a bad company that's not linked with your values, whether it's whatever moral values, whatever it is, and you link to them, whatever happens to them, people are going to say, well, why did you link with that company? Especially if it's bad. If it's good, everybody's happy. But when the bad hits, that's when everything goes down the tubes. So it's just a matter of managing and doing your due diligence and understanding the situation you're in so you can grow your company in the way it needs to be grown. And just in the podcast, it was mentioned you somebody said to me, you get $1 million, whatever, and that $1 million that you put in can either break you or sink you. I can't remember how they said it. You go on the podcast and you hear it. And I thought that was really, really good. I'm like, that is even makes sense because yeah, you get the money, but in the end, that money was able to sink you because you didn't do your due diligence. So if it's a good situation, you're going up. If it's a bad situation, the company's bad, the people are bad, you're going down, and you didn't even know it. You know what I mean? And that's why we have to be very, very careful. That's what good stewardship is. Stewardship looks like. You're doing your research. You're checking the companies well. You're checking out people well. Even employees, check them out. Do the background checks because they could bring in situations that you don't even know about. And the larger your company gets, the more people you're getting. How many people know? More people, more problems. So you got to manage that well and know what they're bringing in. Make sure they're people that are aligned. Like even with our Fava Reach and our human traffic victims, we're putting together all these different things. We have to make sure we line up with the right people because this is a very delicate situation because you have people who are coming in who are very fragile, who are coming in from really situational circumstances where they were taken advantage of and their minds are gone, their bodies maybe gone, everything because the people took advantage of them. So you can't bring in people like that and have people that don't align with that because you could bring them in and get more damage. So we have to be very careful of even all these different things. And that's the things we pray about. And so for me as a founder, being bootstrapped for a little bit has its advantages because all these things I hear with different companies, I can now internalize them and say, oh my God, if we're going there, these are the things we shouldn't do. These are the things we should do. These are the people we shouldn't hang out with. These are the people we should hang out with. And God, please bring the right people, you know? So it's a different situation, but it's good to know, you know, it's really, really good to know because you want that money. Like somebody bring a bill, I say, oh my God, hold up. Let me check with you. Don't just say yes. Say, let me just check and see if this works for us. Do your due diligence and ask them the hard questions. And that's something you should do for any relationship, whether it's marriage, whether it's friends, whether it's business, anything. Ask the hard questions up front because when you ask the questions, then you can understand what you're getting into. Okay, so this is a very good topic. I really enjoyed it. This one was really, really good, especially for us being in the founder space. You need to know your stuff, okay? Because people out there, it's a hot mess, and they do it and they don't even care, okay? So just be aware. Okay. All right, let's go straight to, and the verse for the day. Philippians 4:19. But my God shall supply all your need according to his riches and glory by Christ Jesus. He will supply all your needs according to his riches and glory by Christ Jesus. So everything you need, that's the money, that's the people, that's everything, the wisdom, the discernment, everything you need, you go to him and he'll give that to you. And then you could do your business well. You could have your family and manage that well. You can manage your organizations well, your time well, everything. because God has everything for you. The money you need, even in the bootstrapping, God can bring the monies in any way He needs to. So trust Him and see Him do great things for you, because it's amazing what God will do when we trust Him. Okay, we're trying to go short today, guys, because I have to go watch. If you haven't, I have to watch the final of the World Cup. I've been watching the thing. I'm a World Cup situation. So it starts at 3, I think. So we have some time. So let's just see what we do here. Okay. What is we're going now to our stewardship segment, and we have all kinds of stuff going on with this war in Iran. And please pray to God, because you saw the people in Iran taking to the streets. They want their nation back. They want the leaders, the bad leaders, to be gone. And so it's a whole bunch of situation, and they're attacking people, and we're putting it together. So just pray for everybody involved, that God will be glorified in that situation. Okay, that's a liberation situation right there. Okay. And then now we go to our stewardship. Now all this stuff going on in the world, everything going, has been affecting the markets, and it hasn't done a bad job. Like people are saying, oh, it went down a little bit, but it goes up. I mean, it really goes up. Let's check. Let me go to Webull. It has been going up. It's been doing nicely. Some of the stocks have gone down, of course, but then they go back up. It's an up and down situation, but it's not much different than before everything happened. As a matter of fact, even with the situation with the oil, the barrels, the price of oil has gone down a bit, which has brought our gas down a bit. Still think it needs to be lower, but it's still decent. Okay. And so all these, but it has exposed so many different things, how we can do things better. You even see the nations, they're like tweaking things. It's just, God has been good. So like I said, in this whole situation, at least for me anyway, I'm not sure. But the markets of one company that's been, I don't know what's going on with Netflix, because I'm still a fan of Netflix, but I think they're having some issues. So it's down to 68.95 as of Friday, I think. And remember, it started off at 100 and something, and it was at 99 for a long time, then 89 and 70 something. All of a sudden, I'm seeing 68. I'm like, And then people are saying the viewage is down. So I don't know, but I'm still there with Netflix, though. I like my Netflix, so I don't know. Anyway, Eli Lilly is up there still, 1179.11, and that's a company that makes all these medical medicines and stuff like that, including even Ozempic, I think it produces, and some of the weight loss situation. Well, Ozempic, the weight loss, but even some of the medications for COVID. I think it was one of the companies that produced those. So it's very good out there, and it's been doing pretty well, and it's still up there. So Eli Lilly, MU, Micron Technology went down a bit. It was up a bit, like in the thousands and even the 900s. It went down a bit this week. So hopefully it goes back up. SanDisk is another one associated with, remember, these two companies create the, I think they create the discs. Is it the microchip or whatever that they use to, in with AI and everything like that, they create them. I forgot the name. It's a name. Anyway, but they went down a bit, but they're still up there. Okay. SpaceX went down a bit, 123.99. It's been hovering at the 138, even the 140 something for a while, but it went down to 123.99. And that was on Friday, because before Friday it was like a 130 something, I think. So that's another situation that hopefully goes back up. And it will, because it's there. I mean, really, these companies are here to stay because of the way the economy is going, and we're doing all these different technological situations and space trips and all that kind of stuff. So yeah, but anyway, that's where it was. AGNC, which is a REIT, went down a bit, but still decent, 1122. Apple is up there nicely in the 300s. I like Apple in the 300s because everybody got stocks in Apple. So it's in the 333.74. Good, 1310. That's another decent situation. Gain, 1654. But they went down a bit, but they're still, decent. Now, RDTE, that's one of our weekly dividends, and it's at 28.68. Went down a bit, but still high. It's still okay. Now, Chevron, and I think because of the new situation where we had to retaliate against Iran because they were now bombing ships even after they signed the peace treaty. So that confrontation going back and forth has caused a little jump in the price of oil. So it was at 70 something. I think now it's probably like at 80 something, not too high, still low, but not too high. So Chevron went up a bit, and if you see XOM went up a bit, which is Exxon. TSYY, our one of our other weeklies, went down a bit, but not too bad because I think it has been hovering at 22 something for a while, 23, and it's at 21.82 today, so that's not bad. Now silver has dropped a bit. I've been noticing silver because it was all the way up to 100 and something at one point, went down to 90 something, 70 something. Now it's at 50, 78, but it's making a little comeback. So I'm not sure what's going on there. Meta, still up there doing good. Was in the 700s, now the mid 600s, but still doing good. SCHD, which is one of those good ETFs that you need to have because they give you good dividends and has been around for a minute. That one is at 32.91. So it went down a bit. Not sure what's going on, but it's still hovering in that 32.33 situation. So it's not bad. GNL, which is another REIT, picked back up again. It had gone down to 8 something and it's back to 9 something, which I like to see. And then hopefully it goes higher than that. But that's one of the tried and true REITs, not too expensive, but you can put in there and you can get good value right there. QQQ, another ETF, very good in the 695. I think it was in the 700s, went down a bit on Friday. So uppage is necessary. SPY is another good ETF. It's still in the 700s, went down a bit, but still there. VU is another good one. NVIDIA is still up there, but just took a little dip. It's in the 200s for at least 2 or 3 weeks, which I like to see. I really do. I want it to go higher and higher and higher. GNMA, and YETH is one of our weeklies. I hope you at least have a YETH or something because every week, and it's not too expensive. Okay, so just remember that you get paid every single week. Okay, let's go to I'm trying to hurry up here, guys. I thought I would do better than that, but hey, it is what it is. Okay, let's go and look at our NASDAQ because NASDAQ is where we get some of our official situations. And remember, SpaceX, I think, is now on NASDAQ. They went on there a little bit like a week or two ago. So they're on their platform now and doing well. But God, the little dip. But I think everybody was talking about it and they expect the little dip. They expected that to happen. So hopefully it goes back up. I don't want too many dips, especially with what we have going on. Oh, look at the most active by dollar volume. Mm-hmm. Everything's in the reds. Everything took a little dip. I told you on Friday, like Thursday was okay, but after Friday, I was like, what's going on? It was not too low, but just a little. You know what I mean? So, yeah. But again, always remember when you see that, don't panic. It's a time to look for sales. How can I get something for less? Okay, especially the good companies. MU down, SPY down, QQQ down, NVIDIA, SanDisk. Now, Apple is a little up. That's what made me really, really happy. Apple was up there. I'm like, thank you, Jesus. Okay, AMD's down, Meta, Microsoft, and INTC is down a bit. So we have some downage, but they're still not too low. You know what I mean? So you can still make a little situation there. Okay, retail trading activity tracker. MU, of course, is down, sell -4. BITO is even. NVIDIA is down a bit. SanDisk is down a bit, and INTC is down a bit. So you don't see too many greens this week, but it's not a bad situation. Okay, it's like things are still decent, but we just have a little downage. But the economy is still, yeah. And I've been hearing about all kinds of stuff. I just pray. When I hear the crazy stuff, I pray. I say, God, show me what to invest in, show me what to do, and preserve me from everything else. Because I'm not participating in the downage in Jesus' name. And my stocks, God just keeps helping. So anyway. Don't forget your dividends coming out as of tomorrow. What happened here now? We have a little situation. Okay, let's see. Monday, if you have anything, again, keep checking your brokerage accounts and seeing. They should send you alerts as to when dividends are coming out for all of the stock companies. So look for those, see those, check in here, check in NASDAQ, because we get to see companies we did not even know existed and have decent dividends. Like look at this $4 dividend situation. First United Corporation, common stock, $4. That's a decent thing per share. Okay, $1.08 per share. And the price of the thing is what? I'm gonna have to go and look into this now. What is this? You click on here and you find everything about the company. Now, again, never just buy something like that, okay? Put it on your watch list. Don't just jump. 45, not too bad. And then also remember your ETFs are there. There are a whole pool of all kinds of stocks that can be in there as well. So look at those and see how you can build on your portfolio, especially now. Why? Because it's a sale. Okay. And if you're like me and many other ladies, we know when there's a sale, we need to see what we can get for less. And now would be a good time to look and see what companies are available, especially if they're good companies and they're at a little discount. So you can get it for less and watch it go up and watch your increase take place. Okay. There's some companies I've never look at this company right here. USOI, Credit Suisse AG, Credit Suisse AG, Credit Suisse X, links crude oil shares covered, call ETN. Oh wow, it's a call, covered call ETN. That's another thing you can. They're selling covered calls. You can buy. That sounds like a good situation here. USOI, and look at the dividend, 209 per share. Now we don't have much time, but do your research on. That's probably one you could do research on. Let's see what that is for our homework today. USOI, and not that expensive, 46.80. Credit Suisse. Now anything with Swiss, I look into it because Swiss, that's where the money is. Everything with Swiss, you look into it and check it out, see what's going on. Because Switzerland, yes, okay. But 46.80. I'm gonna do homework on this one. Tell me what you find in the chat. See, put it on your watch list. Put it right now in mine. Again, you can get the Webull app. You have Fidelity. You have whatever account you have. I like to use Webull as my paper trade, so I'm not getting all over the place with where my money is. And then you can also do money through Webull too. Don't forget that. But just let's look at USOI and do homework on that company for this week and see what's going on there. Okay, and just for the watching, probably that's what we should do. And then leave in the comments what you found out and if it's something good. Look at the dividends, and it's dividends every month. Hold on, y'all. It looks like every month to me. Oh my goodness, wait a minute. What is this? This last one was in June. It's every month, 254. So the next one's coming in July 22nd, I guess. It's a monthly, y'all. Okay, put that on your list and see what it is. Let's just see. You don't, again, UBS, it says UBS E-Tracks crude oil shares covered call ET. So it's a covered call, which is part of the options. Now, you can, that's how some of the options, you can trade them like almost like they're a company, but that's another thing. But just do research. Let's just do research on this. 2 something a share. The more shares you have, okay, that's a good one. But just check the company and see what's going on, and then bring it back next week and let's see what's going on with that one. Okay. All right. Well, we have done our due diligence. Again, look for your dividends for this week. Look for also your extend dates. Is it extend they call it? Yeah, where you have to, the date by which you have to pay to be part of that particular payout. So look for those. Always look for those. Yeah, X dividend date. And then the payment dates, and see what works out for you and add to that portfolio. And keep growing and what? Generational wealth, helping preserve a situation for your kids and your future grandkids and all that good stuff. Future generations. Oh my God. Okay, this is good. Hopefully we are being good stewards of everything God has for us. And by now you should be that good steward, because we're EV value warriors. We're EV warriors doing good things and bringing value everywhere we go. And when you do that, when you're building for you, always remember, it gives you more of a capacity to help others. That is also something you have to keep in mind, because everybody can't be not bootstrap, but struggling all over the place. You got to get better so you can help others. So always think of it as that, and create that legacy for your children and your children's children. Oh my God. Okay. It's been real. It was a wonderful day. I hope everybody goes and enjoys the World Cup. And I'm not even telling my team because I don't want to put anything in there. But my team's there and they better win. Oh my God. Because there's been a lot of ups and downs between the semis and today. But we're going out there and we're going to support. I hope you continue to do great things for God, y'all. Continue to live out the life that God wants you to live out, because it is just important. And right now it's crucial that we do that. Okay. Again, don't forget to have the Fava conversations. Don't forget to go to our website, favorofagreatgod.com, see what's going on. Fava Festival page, join, get a friend to join. If you love to travel, then you'll be part of it as well, because we're not just traveling. We do work. We get it done while we travel so that we can be a blessing everywhere we go, and continue to trust God to supply all your needs according to his riches and glory by Christ Jesus. Today, the song that we had this week, Referral Loop. Remember, we're in the series. So this is a series for July. And it's talking about when people you refer to for your companies, and the information you get, and the value you get from other people, and helping to, once you get that information, be willing to pass it on to others, because that helps a lot in the founder space, in the entrepreneurial space. People need sometimes that additional connection and the resource. We often think of resources as money, as things, but humans are resources as well. That's why you say human resources. Humans are some of the best resources that God has given us. So when you find that information, help someone, pass it on to someone else so that they can come up, because especially if you're a founder, you need all the help you can get. It's all the help you can get. So don't be afraid to do that. So we're going to end with that today. I pray God's blessings on you. I pray you do everything God has called you to do. And don't be a slacker. Don't think, oh, I can't do this. Anything I've learned from this whole World Cup, never give up. Keep on going to the end. Believe in yourself. Believe in God that he's able to do exceeding abundantly above all you may ask or think, and get into that space. Go in your investments. If you start with $5, $10, start there and build and get those dividends. And we haven't even touched stock options. I haven't even touched that because I'm not sure if I'm ready to, because I'm still learning it. And I don't want to confuse everybody with things. So I think just staying in the dividend space. And if you learn about it, go right ahead. If you hear about it, go ahead and study it. I mean, it's out there on the website, on the internet, everything for you to study. But all these different things, even on Webull, they show you they break it down to you, so you can study there. Fidelity does stuff. They have different webinars that you can listen to. I listened to a couple of them. They're really good to get you that information you need. But just start one step at a time and just see God grow everything you have. And with everything, I always tell people, even in the growth, don't just go all willy-nilly, because things can happen, like what's going on with the economy right now. That's a little downage, and goes up and down. But you have to understand, take that as a learning lesson to see how things go within your portfolio, so you can figure out how to navigate for the future. Because all these are different learning things to tell you. Things work, but when other situations happen, see how that navigates, so it can help you navigate what to do for the future and to keep on building and build well. Okay? All right, guys, we're going to end with the song Referral Loop. Continue to enjoy God. Enjoy everything he has for you. Continue to have those Father conversations. Talk to someone, bless someone, be a blessing to someone, and let God show himself strong in your life. Keep on adding value. I don't care what you see in the world. Keep on adding value and be the light that God has created you to be. Continue to have Father conversations. We'll see you next time. Watch the World Cup. Enjoy the World Cup. Have fun with your families and be everything God has called you to be. Bye-bye.
Before the referral loop, ads burned through the month. Cat kept climbing and I was running on numb. Pages full of promise, but the well ran thin. I kept smiling through it with the tired in my skin. Then one name came back, then another, then three. Small sparks in the dark turning into a tree. The referral engine runs on what you already built. Every happy customer carries your story in their words. The referral engine runs on what you already built. Every happy customer carries your story in their words. The first organic chain started passing hand to hand. One good voice became three, and I could finally understand. It wasn't loud or shouting, it was trust taking root. One satisfied customer opening the next door loose. Then the loop clicked clean like a key in the lock. What I pushed for referral engine.